Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the NASDAQ 100 E-minis futures contract. This is the NQCV1 on the Metastock and Icon platform. Now, over the last couple of months, we had a tremendous rally using the major market reversal signal, two of them, the very strong signal and the swing trade, and very, very strong rally, fantastic rally, scored a lot of points on that move in the futures contract. We then got a Ichimoku cloud chart buy signal below the cloud. They are generally considered weak signals because price action below the cloud is bearish and price action above the cloud is bullish. So keep that in mind. Then got to the first level of resistance, broke through that, had a brief period of consolidation, rebounded from the standard line of the Ichimoku cloud, and then continued higher. Each time we get to the standard line, as well as front-end cloud chart support zone there, you can see we had a nice little move to the upside there. Next one, breakout of this base, another support zone there, strong rebound from that support zone there. And then a little bit of a correction here back in October. Climatic rally there, got a little bit extended from the top end of the cloud. We look at the distance between the price action and the top end of the cloud. Bit of a consolidation, much needed consolidation since the April move. We haven't really had a nice consolidation or a strong one on the upside. Now, key levels to watch out for on the daily is this front end cloud chart support. Can see how recently we had a nice swing trade from that zone, broke through the standard line there. The standard line there is also the support zone there. Keep an eye on these two levels for significant support. And as long as we stay above the bottom in the cloud, the rally is okay. As soon as price action starts to slice through the bottom in the cloud, we're going back in bearish territory. So far, bullish chart with swing trade opportunities with these consolidations back down to critical cloud chart support levels. But so far, so good. Nice little move, rebound there after becoming too extended. Got our consolidation and then managed to find support at the bottom end of the front end of the cloud. Of course, let's take a look at the 4-hour. On the 4-hour, we can see, back in October, strong rebound from the cloud chart support level here. Top in the cloud chart rebound, strong rally up, became too extended from the top in the cloud. Bit of a mathematical mean reversion, but in this case, very strong reversal. Back to test this support at the top end of these old highs. Managed to rebound from that level, only to run into trouble very close to the top end of the cloud, and then another sell-off, a very aggressive sell-off, slice through support there, and then the taps opened, and then we managed to find support back here at this cloud chart support zone of October. Strong rebound there, quick AI generated buy signal there. Managed to get through the bottom end of the cloud, now facing a bit of resistance between the top end of the front end of the cloud there. You can see that zone is a resistance zone, and support is now with these long wicks here at the bottom. We can see that is kind of in and around the front end cloud chart support level. So you can see there, we kind of range bound between those levels. Now, the catalyst to watch out for, we need to be back above this top in the cloud here to be ultimately bullish on the 4-hour. So any price action through there, a breakout through there, will be another swing trade opportunity when it rebounds from the support zone there and breaks through. If this resistance holds, we're going to have to reverse our trade, and then if it stays below the cloud, then we can go short back down to where this standard line is a new support zone. So the standard line there is a support zone below the cloud, as well as the bottom end of the front end of the cloud. So there's downside risk to this level. But if we manage to find a breakout from these support levels there, the old 25,500, and then a cross of the cloud there, that will be another cloud chart cross buy signal to the upside on the 4-hour. And then the upside levels to look out for is this one, a retest of this old high and cloud chart resistance, and the top end of the cloud there. That would also be the other upside target. So these are the two upside targets, provided we get a rebound from this cluster of support, the top end of the front end of the cloud, as well as these old lows here. The market's giving us an idea that it wants to rebound from that zone, breaking past the cloud chart resistance, and then we have these upside resistance targets. So these are the upside targets. These are the downside potential rebound support targets. The first one is here, and if we get a second rebound from there, and then both these two trades should be profitable to the upside. If we keep slicing down here, we could retest these lows again. Now we can see that these highs here are significant support zones, and they correspond well with the front end of the cloud, the bottom in the front end of the cloud, as well as the standard line of the cloud. Very, very volatile sessions lately. Lots of aggressive selling. We can see here every time we get a bit extended from the cloud, we get an aggressive sell off. So keep an eye, watch out for that. But this was a nice, strong rally. This is almost like a Fibonacci retracement to a little bit 23% retracement. So keep an eye on that. But support zone is that zone there, 25,273. Standard line as well as the bottom end of the front end of the cloud. And then that level is the next one to be tested, 25,493 for potential breakout past the cloud if we get a nice support rebound from that zone. Let's go and take a look at it on the 60-minute. On the hourly, we had a beautiful strong rally here. A rebound from this old cloud chart support levels here, broke through the top in the cloud, strong rally, became a bit extended, and then we get a consolidation back to test support at the top in the cloud there, and then only to get a sell signal, artificial intelligence generated a sell signal as it sliced through the bottom of the cloud, failed to find support there, and then the taps opened as well. You can see how this old resistance level, old cloud chart level there, became a new resistance level. Tested twice, failed second time, sliced through the cloud. That was another sell signal there, and then the taps just opened. Tried to rebound from this cloud chart level, strong relief rally there, only to be met with resistance at the bottom in the cloud there. So the swing trade strategy is here we buy the swing trades when it becomes too extended from the bottom in the cloud, that gap there, swing trade it back to a resistance zone, and then we can see another resistance test here. Couldn't get past the top in cloud chart resistance. Taps open, failed. The support here failed. It tested that zone, failed there, and then hit down here 24.5. This old cloud chart support level and these old highs. There you can see where that level comes from. So keep in mind, just like we're on the way up, where we can take profits when it becomes too far extended from the cloud, on the way down, we start swing trading back to cloud chart resistance at the bottom in the cloud. So last trade, yeah, November one worked really well. Managed to break through the top in the cloud, and then we retested this cluster of support here. Ran into trouble again with these levels there. So keep these two levels in mind there. Those are significant resistance levels. They're almost held for the third time now. And that is the bottom end support zone, bottom end trading range. These are the support zones on the cloud. Now, critical for price action to stay above this top end cloud to be bullish, but any kind of dips below here could see a swing trade support zone, support swing trades when this support level holds and at the current levels. But so far, forming a kind of a consolidation base and looking to break out further from that zone. The 4-hour one is pretty much the safest time frame to be trading the futures on. The hourly we can be quite choppy, but let's take a look at that one. Just to recap on the 4-hour, top in the cloud remain resistance for now. The downside support target is the top end of the front end of the cloud, as well as that support zone there. So we could see support come back in at that level, and then we swing trade it back through the cloud. But what we really want to see, the catalyst we really want to wait for, is this breakout past this cloud chart resistance. So that's the key level to watch out for. Downside risk, as mentioned, is this support zone there, and as well as the standard line, the bottom end of the front end of the cloud. We're not out the woods yet on the 4-hour because price action is below the top end of the cloud there. So we are still slightly bearish there, but to be really strongly bullish on the 4-hour, we need to break past that cloud chart resistance and trade within this zone. Until next time, thanks for watching and happy cloud chart and AI trading. Bye for now.